The following video will examine and explain each part of Apple's consolidated balance sheets. This is the second video that is included in a series, which investigates and describes all aspects of the financial statement with Apple as a leading example. All parts of the consolidated balance sheets, including current and non-current assets, current and non-current liabilities, and shareholders' equity, will be included and explained. The video is directly related to the financial statement of Apple 2022, but the concept and understanding of the balance sheets can also be applied to every other company. As a quick reminder, here is the legendary value investor Warren Buffett describing why you should pay attention.
You've got to understand accounting. That's got to be like a language to you.
Furthermore, the balance sheet consists of two columns, one containing the assets and the other liabilities and shareholders' equity. The sum of all assets on the left-hand side must equal the sum of all liabilities and the shareholders' equity on the right-hand side. It needs to be in balance to be correct. Current assets consist of cash and cash equivalents plus all short-term assets. These short-term assets are highly liquid and can easily be converted into cash. It should be convertible within 1 year or one operating period to classify as a current asset. Cash and cash equivalents amount to about 6.5% of the total assets. The assets consist of a lump of cash equal to roughly $18.5 billion. Moreover, the cash equivalents, such as treasury bills and commercial paper, represent assets with a 0 to 3 months maturity. They are highly liquid investments and amounted to about $5 billion. Marketable securities stand for 7% of Apple's total assets. The item covers several different assets that are unrestricted and can be traded on a public stock or bond exchange. For example, it can be US Treasury securities, EU bonds, as well as China government bonds. The balance sheets consist of $5 billion worth of US Treasury securities and a total amount of $9 billion in foreign government bonds. Other assets to include are current corporate debt securities, commercial papers, and other short-term marketable securities. Overall, easily bought, sold, or traded assets. The third row is accounts receivable, net. It constitutes about 8% of the total assets. Accounts receivable represent the products or services that a business has delivered to its customers but have not yet been paid for. This could, for example, be for an IT company that just bought new Apple computers. The customer or the IT company received a 10 days credit to pay the invoice. So, if the customer buys the product on day 1 but waits 10 days to pay on day 11, the gap between the products were sold and when the business receives the payment represents the trade receivables. Apple's inventories are very low, adding up to only 1.5% of the total assets. Inventories are, for example, a business finished goods waiting to be sold. For Apple, keeping an exceptionally low inventory creates high efficiency, something the business was known for in the mid to late 20s, together with its high inventory turn after Tim Cook joined the company and changed its operations in 1998. Additionally, the business uses the first in, first out method. Another part of the inventory is components, as in work in process. It can include raw materials, labor, and overhead costs. In 2021, almost 20% of the material in Apple's products was recycled. The fifth current assets are the vendor non-trade receivables, which accounts for 9% of the total assets. Vendor non-trade receivables are amounts due for payment to an entity outside the normal customer's invoice. An example can be when outsourcing partners and vendors purchase components for manufacturing and assembly, used for companies' final products. The last row covers all other current assets and composes 6% of the total assets. Other current assets are a default classification that contains less common assets with less value, or which are rarely recorded. In other words, they are uncommon or insignificant. Some examples can be derivative assets, life insurance policies, the cash surrender value, and concerning suppliers and employees. Oh, advances paid to suppliers and employees? The total current assets finally add up to just above $135 billion and 38% of the total assets. Apple's cash ratio, which is a measure of business liquidity, is calculated by dividing the cash plus marketable securities by the current liabilities. It amounts to about 0.31, indicating that 3 times debt to the cash and marketable securities exist. Additionally, adding more leverage increases the efficiency, but also the risk. The next part, non-current assets, includes all long-term assets in the business. Non-current means that they are harder to convert into cash, and their full value will not be realized within the accounting year. The first and largest item, marketable securities, amounts to 34% of the total assets. Non-current marketable securities are harder to liquidate and convert to cash. Most often, they need to be traded over the counter, OTC. A part of marketable securities is corporate debt securities. Companies issue debt security and sell it to investors. The investor returns interest on the corporate bonds at fixed or variable rates. Apple currently has a portfolio of corporate debt securities worth a staggering amount of $70 billion. Additionally, marketable securities also consist of treasury, agency, and government securities. It can be mortgage and asset-backed securities, and finally, municipal securities, in total adding up to $60 billion. The second row, property, plant, and equipment, net, attributed to 12% of the total assets. Of the total amount concerning property, plant, and equipment, one of Apple's 3 different items is land and buildings. The original value for this asset class amounts to $22 billion. The second asset class constitutes machinery, equipment, and internal use software, adding up to a total value before depreciation and amortization of $81 billion. The third and last asset class are the leasehold improvements, for example, customizations and improvements of buildings and properties, contributing with a value of $11 billion. Finally, the current value of these assets is obtained by subtracting all depreciation and amortization, which equals $72 billion, of which $8.7 billion was a deduction from 2022. The last part regards the other non-current assets. It adds up to a total of 15% of the total assets. Other non-current assets, similar to previous, is a default classification that contains less common assets with less value or which are rarely recorded. Sometimes it can be described as dead inventories. Moreover, the asset class can consist of, for example, operating leases and foreign exchange contracts. Other items included are different advances such as for staff, partners, directors, and the acquisition of fixed assets. A key figure for measuring the relationship between sales and assets is the asset turnover ratio. By dividing the net sales, which amounted to just above $394 billion with the average total assets, which is obtained by adding the total assets value of 2022 plus 2021 divided by 2, or quotient of 1.12 appears, meaning that the value of the assets used is lower than the income generated from them, creating a higher efficiency. The next part of the balance sheet, in the right column, which represents the liabilities of a business, is the current liabilities. These are the short-term financial obligations payable within 1 year or a normal operating cycle. The first liability class, accounts payable, compose roughly 21% of the total liabilities. Accounts payable represent an obligation to pay off short-term debt. Say that Apple would like to have more iPhones manufactured. The factory in Asia, which manufactures the iPhone, receives an order from Apple. The suppliers give Apple a 30 days credit. When the iPhones are ready in the factory, they will be shipped to reach their final destination. However, Apple insists that they do not want to pay for the shipment with cash from its operation, and instead decide to take a bank loan with 30 days credit. It uses the credit from the bank to pay for the shipment. The sum borrowed or credited represent an obligation to pay back both the creditors and the suppliers, together adding up to the liabilities in accounts payable. Additionally, other current liabilities make up about 20% of the total liabilities in the business. Other current liabilities are an asset class that consists of smaller items lumped together. Some examples of this can be the operating and finance leases. It can also include derivative liabilities, normally used for trading or hedging. The third class in the current liabilities is deferred revenue, which amounts to about 2.6% of the total liabilities. Deferred revenue is recognized as a form of advance or as a prepayment for products or services. Apple had deferred revenue of a total value of $12.4 billion on September 24, 2022. Of this amount, 64% expects to be realized within 1 year. Next, commercial paper constitutes roughly 3.3% of the total liabilities. A commercial paper is also known as a form of a unsecured short-term debt instrument or a promissory note. It is a written promise to pay someone and have a specified amount and a particular date for maturity. Apple has issued commercial papers with an outstanding amount of $10 billion in 2022. The weighted average interest has from 2021 to 2022 gone up from just 0.06% to 2.31%. Perhaps this somewhat represents a shift in reality, where so-called free money no longer exists. The last row in the current liabilities, term debt, makes up for just about 3.7% of Apple's total liabilities. The term debt represents an amount of borrowed capital the business has chosen to obtain. Term debt is composed of the borrower, which receives a specified sum of money, and the lender, who receive a fixed or floating interest rate for lending that amount. Occurrence ratio can be used to see the relationship between current assets and liabilities. It is a liquidity measurement representing the ability to pay short-term obligations. By dividing the current assets by the current liabilities, it shows a quotient of 0.88. This means that the company cannot pay off or cover all its short-term obligations, those within 1 year, with its current assets, as the quotient is under 1. The second part of the right balance sheet column is non-current liabilities. They represent liabilities or obligations that don't have to be repaid until after at least 1 year. The first row in the non-current liabilities, term debt, accounts for 33% of the total liabilities in the business. Term debt can have both floating and fixed rates. However, for Apple, the total sum of long-term debt only consists of fixed rate. The effective interest rate has a wide span, starting at 0.03% up to 4.78%, and the total amount of debt equals roughly $112 billion. After subtracting the $1.7 billion in adjustments and the short-term debt of roughly $11 billion, left is the total non-current portion of term debt, equal close to $99 billion. All notes are senior unsecured obligations. A secured debt is backed up by a specific asset or collateral, with a security breach between the lender and the creditor. The senior unsecured obligations are not. However, the company's general assets are due to the first claim by the creditor in the event of a bankruptcy. Apple has future principal payment spanning between 2023 and 2027 of roughly $10 billion per year. The second and last row are other non-current liabilities and comprise about 16% of the total liabilities. A large portion of Apple's other non-current liabilities consist of long-term taxes payable. It represents taxes the business need to pay to the government, and as they account for non-current liabilities, in this case, it is after 1 year, with a total amount of $16.5 billion. Additionally, the other non-current liabilities are, for example, operating and finance leases amounting to $11 billion. Moreover, some examples are debentures, a debt instrument, loans, and bonds payable, with a total amount of $32.5 billion. The relationship between long-term debt and equity can be calculated with a long-term debt to equity ratio. By dividing the long-term debt, which is equal to 98,959, with the shareholders' equity, 50,672, all numbers in millions, a quotient of 1.95 are obtained. Our consensus is that it should not be over 2. The third and last part, in the right column of the balance sheet, is the shareholders' equity. It represents the value the business owners can claim after all liabilities are subtracted from total assets. First out are common stock and additional paid-in capital. The common stock in the common stock and additional paid-in capital represents a par value of outstanding shares. The outstanding shares par value is valued at 0.00001 per share. Moreover, the additional paid-in capital represents an excess, the market price par value, meaning the surplus paid by investors on top of the par value of a stock issue. For example, when Apple stock is bought on Nasdaq, in 2022, the company had shares issued and outstanding of close to 16 billion shares. The second row concerning the shareholders' equity is retained earnings, accumulated deficit. The retained earnings or accumulated deficit covers the business total net earnings or shortage. It represents the profits minus dividends. Dividends are paid out to all the shareholders. For example, 3 of the biggest shareholders are Vanguard, BlackRock, and Berkshire. Moreover, all others who own stocks in Apple. Additionally, common stock withheld is subtracted, which can be used for tax withholding as a retention of income tax from the paycheck for settlement of equity afterward. Finally, subtracting all the common stock repurchases, meaning all of Apple's share buyback during the period. Left is the retained earnings, or, in this case, an accumulated deficit. Finally, the last shareholders' equity class is the accumulated other comprehensive income or loss. The accumulated other comprehensive income or loss is including all special gains or losses. It can, for example, include the different changes in foreign currency, derivative instruments, and marketable debt securities, with a total reduction of $11 billion. Moreover, it represents either profits or losses which are not yet fulfilled. For example, investments in the stock market with open gains or losses are still unrealized. To measure the financial performance, the return on equity (ROE) can be used. Divide the net income, which equals to 99,803, by the average shareholders' equity, which is calculated by adding total shareholders' equity from 2022 to 2021, and divide by 2, which equals 56,881. All numbers in millions. The quotient equals an astonishing 175.5%. To get a grip on the number, even if it's very sector dependent, a good ROE normally ranges between 15 to 20%. To conclude, the current assets, together with the non-current assets on the left side column, need to be equal to the current liabilities plus non-current liabilities, and finally the shareholders' equity on the right side column in the balance sheet. This was the second part of a series examining and explaining the financial statement with Apple as a leading example. For more videos, please subscribe. If you like this video, make sure to check out the next one. Thank you.